Well, good afternoon. My name is John Turk, and I'm one of the directors at Fiduciary Pension Partners. And I'm joined by Graham Kimmerer from MFS Asset Managers. And we've got a great presentation for you scheduled this afternoon about your credit score. Everybody's got a credit score, and Graham will detail ways to how you can figure out what your credit score is, how you can find that out, as well as some ideas and thoughts as to how to improve that credit score, as well as some things to think about that can hurt that credit score. So great information. Now, before we dive into it, just want to give you a quick overview of Fiduciary Pension Partners. We are a full service investment advisory shop located in central New Jersey. We focus both in retirement plans as well as on the wealth management side. Some of the advantages and differentiators of Fiduciary Pension Partners is our investment analysis that is robust and provides both plan sponsors as well as individuals with a best-in-class investment lineup. From the retirement plan perspective, we also specialize in unique and what we call bold plan design features. Make sure that you and your participants can really defer as much as possible into these retirement plans while still maintaining compliance. We also provide fiduciary governance, helping plan sponsors understand their fiduciary liabilities and how to meet those responsibilities. And part of that involves committee training modules that we provide both virtually as well as in live sessions. And then lastly, another service that we're particularly proud of is the employee education that we provide, helping employees understand their retirement plan benefits, how to maximize those, and ultimately how to benefit those. So with that, let's talk about your credit scores, and let me turn it over to Graham.
Wonderful, John. Thank you so much. Thank you for having me here. And most importantly, thank you all for joining in to have this conversation today around figuring out your credit score. Your credit score really is financial fitness. It is something that's going to follow you throughout the course of your life. So, good habits early are really going to impact a lot of the decisions that you're going to have moving forward, whether that's buying a home, purchasing a car, even the ability to get approved for renting your very first apartment. So, what we're going to be able to go over today is all the things that you really need to know about your credit score, where to find it, what goes into it, reasons why it's important, what makes it go down, what makes it go up, and lastly, we'll wrap up with just a quick conversation about what happens if your credit score basically gets hacked. If someone gets a hold of your sensitive information, what can you do to protect yourself and your credit score? But up first, let's talk about where it is that you can get them, because there are three major bureaus that do credit reporting. It's going to be Equifax, Experian, and TransUnion. They gather information about you and your credit usage from people that have lended to you, from folks that that have relationships with you, think like utility partners. They gather that information, they create a score, and they're able to disseminate that out to other groups that are willing to lend you money or give you preferred rates or reasons to give you money. All of these things are going to be disseminated out to third parties, and each year you're going to be able to get a free credit report. A lot of times, folks will choose to get that all at once. So they'll look up their Equifax, Experian, and TransUnion scores all at once. But in our viewpoint, it's usually worthwhile to spread out your ability to look at those credit reports throughout the course of the year. So that way you'd be able to identify if anything strange has popped up throughout the course of the year. There are other third-party organizations, websites, organizations that are able to look at your credit score. Usually Equifax and TransUnion are the ones that they're able to report on, but these third-party groups aren't really doing it just out of the kindness of their heart. They have a reason for that, and that's usually to give you another product. They're going to be recommending credit cards, loans, consolidation of your debt. So it's always good to maybe think about having those because they are free. But if you really want to get insight into what your credit report looks like, each year go to annualcreditreport.com. You're going to create an account, log in, view it so that way you'll be able to stay on top of all of your credit scores. But what goes into your credit score? It's going to be your payment history, How long are you paying on time and making sure that you're paying even just more than what you owe? The amount that you owe, and that's going to be just not on credit cards, but also mortgages, school loans, car loans, any outstanding debt you have, they're going to be looking at that overall. How long you've had credit, the longer is better. The types of credit that you have, and the types of reports that they're going to have are inquiries. There's both hard and soft inquiries. Hard inquiries are when folks are really looking to give you money. They want to take a look at your credit report, make a determination, and then actively give you money based upon that inquiry. Soft inquiries are more about promotional offers and things like that. They don't have as bad, or actually, they don't have any effect on your credit score at all. Credit scores are based off of ratings up to 100 or up to 800 or more. FICO is the most widely used credit score. They're the ones that most folks are talking about. If you said, hey, I have an 850 credit rating, which means you have a really good credit rating, it's usually FICO, which is the Fair Isaac Corporation. These are tailored to specific industries. So your credit score could be different for getting a credit card, for getting a home loan, than it is for getting a car or getting utility rates. Why are there so many scores? It's because there's different models that go into this. And all of these different models tend to have different weights about what they believe is truly important for the aspect that you're going to be pursuing to get that loan or to get those preferred rates. Now, what goes into a credit score? The biggest portion of this is going to be your payment history, making sure that you're paying your bills on time. Now, if you miss your payment by a day or two, it's not going to be the worst thing. You may just have to pay a late payment fee because of that, but making sure that you pay your bills on time, and if it's a credit card, as an example, paying more than just the minimum payment is going to be a positive impact. The amount that you owe is going to be the next most important portion of this. The general rule is that you want to keep your credit utilization rate below 30%. If I have one single credit card and my credit limit is $1,000, I want to make sure that my balance never goes above 300. If it's above 300 or 30%, that could have a negative impact on my score. This can get tricky because sometimes you may decide to get multiple credit cards. Sometimes these credit cards may offer you 0% or low interest rates to transfer balances. But if you now have one credit card that is completely maxed out because of a balance transfer, you could be above this 30% magic number, which means you could see your credit score go down. The length of your credit history is also very important. The longer you have credit, the more it's going to facilitate into your credit score. The minute you get a credit card, whatever that first credit card is, even if it's something that has a low credit limit, you want to keep that open as long as possible so that way you do have that long credit history. New credit, when you're looking to get different lending sources, you never want to have multiple ones hit at the same time. New credit can have a damaging effect because they are doing those hard inquiries. And lastly, a credit mix is going to be in there. Do you have credit cards? Do you have school loans? Do you have car loans? Do you have a mortgage? All of these different things. They look at that mix of credit, basically your ability to pay back multiple lines of credit. All of these are going to factor in to having a good credit score. Why it matters. We mentioned this a little bit throughout the course of the presentation, but it's all the things that you want to do throughout life. Having a strong credit score helps with it. Getting loans, the amount you're able to get on that loan, the interest rate you're going to pay. And this could be having lower credit card interest rates or having preferred mortgage rates. The terms of your credit, how long they're willing to let you pay that back. Employers are also going to run credit reports on you as well. Having a really bad credit report could prevent you from getting the job that you want to have. Utility providers also look at your credit scores to make sure that you're going to be able to pay those bills. Apartments that you want to get, they're doing background checks on credit scores to making sure that you can actually pay your rent. And this also has relationship potential. And that's not relationship with all these providers. We mean the person that you want to enter in a long-term relationship with. One of the most important conversations to ever have with a future partner, specifically if you're thinking about getting married and joining your finances, is to understand each individual's credit. Because, for example, if you're looking to buy a house, that's going to be based off of the lowest credit score. So if one person has perfect credit and another person has really bad credit, that loan term that mortgage is going to be based upon that lower score. So making sure you have honest conversations and hopefully having good credit can lead to a really good solid foundation for a relationship moving forward. Now, how do you hurt your score? We did mention missing a payment. Like I said, missing it for 1 or 2 days isn't the worst thing in the world. You might have to pay a fee for that. But it's when it's extended periods of time, more than 30 days, that's going to have negative impacts. And if you have several of those more than 30 days in a row, 30, 60, 90 plus, that's when it can be really, really detrimental. If you max out a card, that's going to throw that utilization rate really far off, possibly above that 30% magic number. If you apply for too many loans or too many cards at the same time, too many hard inquiries at once can have a damaging effect on your credit score. The good news about hard credit reports or hard credit pulls is that they do have a diminishing effect over time. If you apply for a credit card in January and then another in February, as time goes on, those two hard inquiries lessen their impact and they do drop off eventually. They aren't on your credit report forever. If you cancel cards, this can also be problematic because that means the overall amount of credit that you have has gone down, which can also have a negative impact on that utilization rate. Or another challenge is if you have a card that you have never used or have not used for a very long period of time, the lender themselves may decide to close that card and they don't really even inform you about that. So that can have an accidental negative impact on your credit report. So a best practice that we have is making sure you use your cards periodically to keep them open, or a lot of folks may find it more simple to have automated payments that they're going to pay anyway, just happen to that card. Maybe your cable bill, your phone bill, things like that. Have it go to a credit card and then pay it off immediately so that way you don't have a balance, but that way you are able to keep that line of credit open. Those balance transfers we talked about earlier can impact this because it can put an overwhelming amount of money on one card, throwing that utilization rate out the window. If you co-sign for a loan, that can have a negative impact, or you add another person onto an existing line that you have. If you let any credit reports go undisputed, if every year you're looking at that credit report and saying, hey, that's not something I did. I did not open XYZ credit card from that company. If you don't report that and let them know and then file reports to get that undone, whoever may have taken that out in your name, that can have long and lasting effects on your credit score. And things that we just generally try to avoid is any potential problems about paying things back. If you max out a credit card and you're not able to pay it back, they close it, you still owe that money. So having to pay that back incrementally over time to the company, doing a debt settlement, if a home gets foreclosed on, if there's liens on property that you own, all of these things have really negative impacts on your credit score. The good news is, hopefully, you're not going to be having any of these things really apply to you, but there's also ways to boost your credit. Make your payments on time. Again, a long history of doing so is very impactful. Keep tabs on that credit utilization rate. You're able to see that fairly often. You can have a general idea of how much credit you're able to pull from. Keep it below 30%. Time your applications carefully. Like I said, don't apply for 3 credit cards all at once. You could possibly spread that out over the course of several months or even years. Only apply for credit as needed. If you're going shopping and they give you a promotion that says, hey, you can get 10% off by opening up a new credit card, that could be something to consider, but that also could have an impact on it. So making sure you're only applying for credit when you really need it and are really going to use it. Paying off debt, if you're going to take that below the utilization rate, that's always going to be very, very helpful. And incrementally throughout time, as you pay down those larger loans, mortgages, and car loans, that's going to have a positive impact on your credit score. And making sure that you fix those credit report errors, undoing any damage that was unintentionally done in your name can be very, very helpful. Any negative impacts to credit scores happen very, very quickly. However, boosting your credit score, taking it back up, takes a little bit more time. So, making sure that you have these healthy habits throughout the course of your history with your credit will make sure that you have a solid credit score to start and that it continues to stay strong throughout time. Now, how can you find your score? A lot of credit cards today offer the ability for you to see your credit score right on those login pages or the apps when you go in there. That's a good feature that's become a lot more prevalent lately. So if you do open up a credit card, if it's your first credit card, having the ability to look at your credit score there is incredibly helpful. Loan statements may also have it right on there. I know each month when I get my mortgage statement, they happen to give me what my credit score is for that month right there. Banks can also let you know this. Credit score utilization services. So you can sign up with Experian, with Equifax, with TransUnion, and you can have a pay for service with each of those three companies. And like I mentioned, there are some third party providers out there, but be careful because they really do want to push loans on you. And that's that fourth group there that doesn't require you to pay for it, but we want to make sure that you're using it for the right purposes, just kind of informational and not unintentionally opening up unnecessary credit. Now, we want to make sure that you take action steps in case anything does happen. Oftentimes, if you're swiping credit cards or you're using chips, companies and stores that you use them at do get their information stolen from time to time, and your information can get out there. So check your credit report. If it drops precipitously in 1 month, it's going to tell you the reason why that happened. And so if it's not something that you did, you want to make sure you're reporting that and undoing it. Be careful of suggestions. So basically, a lot of companies will suggest you do these things. Like I said, if you do one of those third-party companies, they could say, hey, open up this new credit card and do a balance transfer. Both of those two actions could have a negative impact. Don't ignore any signs. If you feel like your credit has stayed the same for months, even years, within a small band, and suddenly it's really going down, that's a red flag. You want to check on that. Put together a budget. You want to make sure that you're always able to pay what you're able to actually pay and not extend yourself because you can have some pitfalls there. Communication is key, and that's usually with your partner itself. And the last step is a credit freeze. If your information does get stolen, you can have a credit freeze. So basically, if somebody was using cards that were taken out in your name because they had your sensitive information, you can freeze your credit. You can then report that action to the credit reporting agencies. You can also work with the police. There's also an FBI agency that you're able to work with to make sure that you can helpfully undo any of the negative steps that these folks have done, so you can get numbers changed, get your information safe, find out where the information was stolen from so that way you can change any of your login information. Credit freezes are incredibly valuable. They don't cost any money and they can be undone at any time. So that's everything you really need to know to start making sure you have strong credit from day one, some of the actions you can take to make sure that you don't have them go down, and some action steps you can take to make sure should something happen, you can also increase them as well. I appreciate everyone taking their time today to learn a little bit about making sure your credit score starts off strong and stays strong, but I'm going to hand it back on over to the folks at the team here for any closing thoughts.
And thank you for that helpful information, Graham. That was great. And thank you for the to the audience for spending some time with us. We hope the information was valuable, beneficial. Remember, there are ways that you can improve your credit score. There's also some habits where you might want to change those to improve it on a go forward basis. So thank you again to the audience, and thank you, Graham. This is very helpful.
My pleasure. Thank you so much, John. Take care.
You too.